Hello everyone, and thank you for taking the time to watch this video. It's Wednesday afternoon, March 19th, 2025. In a few minutes we'll go over the FOMC interest rate decision and economic projections, Bank of England interest rate due tomorrow, Bank of Japan, the tariff impact on interest rate decision, and technical analysis for GBP USD and USD JPY. Now let's get started. Today, and as widely expected, the FOMC maintained interest rates at their current level. The decision was unanimous, and the summary of economic projections suggests that the FOMC participants see inflation, the core PCE, closer to the 2.8% by the end of 2025, and also the expectations for interest rate cuts remain as last seen in December, 2 by 25 basis point interest rate cuts between this meeting and December 31st, 2025. Some key notes to mention: the committee still judges that economic activity has continued to expand at solid pace, unemployment has stabilized, and labor market conditions remain solid. The committee also acknowledged that uncertainty around the economic outlook has increased, and there was a slight change in the language used. And it wasn't just the FOMC who kept interest rates on hold. We had Bank of Japan yesterday kept interest rates on hold as well, and cited the risk driven by driven by tariffs. We also have Bank of England is scheduled tomorrow for their interest rate decision. And it seems as though central banks are trying to buy time ahead of tariff implementation and to see the tariffs' impact on inflation going forward. And now a quick review for just few of the news released earlier this week. We had an increase in the US industrial production, possibly due to tariff front running, increased by 0.7% in February, well above the 0.2 expectations or the forecast. We also had a revision for Eurozone inflation, which actually changed the percentage of interest rate cut expectations for the upcoming ECB meeting scheduled for, I believe, April 18th. We'll check now in a moment when we see the percentages. Looking at the CME FedWatch tool following the FOMC interest rate decision and the summary of economic projections, we can see that the expectations now for May 7th FOMC meeting to keep rates on hold at their current level currently stands at 80.5% or 80%. And for the European Central Bank, the ECB meeting we just spoke about, scheduled for April 17th, the expectations for an interest rate cut according to the Bloomberg analyst surveys stands at 53%. So 53% of participants expect a 25 basis point cut for the upcoming ECB meeting. And for Bank of England meeting scheduled for tomorrow morning for March 20th, the expectations are also for rates to stay at their current level. Only 1.7% expect an interest rate cut according to the Bloomberg analyst surveys. Now moving over to technical analysis, and we are looking at the daily chart for pound dollar for GBP USD, and we can see that price action has been trading since September of 2024 within a descending or a declining trend. It can be called also a descending channel if we were to connect these lines. The same idea at the end of the day, it's a declining price. We had price action broke out above of the upper borders for the descending channel or the trend, and since the breakout, price action continued moving to the upside, making higher lows every time as it goes up. And over the past few days, I would say over the past 10 to 12 trading days, price action has been trading close to the upper border of the new ascending channel, which is currently under formation, or where price action is currently trading within. This actually reflects a strong uptrend as the price is moving closer to the upper side of the channel. As long as it remains within these ranges, the trend strengths would remain the same. We have a confluence of support below the price level, and we can see that today, following the news, price action actually touched the support level or the confluence represented by the intersection of these two moving averages with the weekly pivot point, and then reversed back up during the trading day. Another critical confluence of support below the price action, but it actually pretty low from where we are now, which is represented by the intersection of multiple tools. As we can see, we have a monthly resistance level, we have the lower border of the ascending channel, we have support level here S2, and we have an intermediate moving average as well. All the lagging indicators, RSI for example, remains at its overbought level. That's a typical reaction for RSI when it's moving in a strong uptrend. We see RSI rising, we saw RSI rising from oversold at the beginning of the trend, and as the trend continues to move up, it remains near the overbought levels as long as the trend remains strong. We also have the MACD line, the blue line, remains above its signal line, again moving in line with what's happening with price action. Now we move over to USD JPY, the US dollar against the Japanese yen, and this is the daily chart. We previously spoke about the range where price action was moving here previously, and then we covered the descending channel where price was moving, and then we had multiple lower troughs, I would say, or lower lows as price action was moving within the descending channel. And we had a positive divergence on RSI last time, which suggested that we may see a move to the upside. And this was the move to the upside over the past few days. And today, while the FOMC interest rate decision, at the time of the FOMC rate decision, price action attempted to break above the line. It did break. However, as the day or the trading day went by, price action reversed back down, and now it's back within the descending channel, as we can see. So if we stay within the descending channel, we can see where price action next steps or the next support level to challenge would be the pivot point, the weekly pivot point. And we also have it is the weekly, yes, and we also have two fast moving averages and an intermediate one. The confluence of the technical indicators in this area represents a strong support level, and we also have one below that here. This is the monthly support of 147.49. RSI is in line with price action, and the same here for the MACD indicator. Both of them in line, not providing any signals or any clues. Once again, thank you for taking the time to watch this video. For more information and to explore our live webinars, Trade the News webinars, please visit oanda.com/webinars. Thank you so much and wish you a great afternoon.